Hello, accounting enthusiasts. Welcome to Acctvocab, where we simplify accounting terms in just 2 minutes. Did you know that in accounting, businesses and their owners are considered separate entities? That's the power of the accounting entity concept. Let's break it down. The accounting entity concept states that a business is treated as a separate unit from its owner or any other organization. This means all financial transactions are recorded as if the business stands alone. Why is this important? It keeps personal and business finances from getting mixed up. This separation is key to accurate financial reporting. For example, if you're running a small business, any money you invest in the business is treated as a liability to the business, not your personal funds. This clarity helps track profits, liabilities, and the business's financial health. An accounting entity can be a business like a sole proprietorship, partnership, or corporation, a nonprofit organization, or even an individual for tax or legal purposes. So, next time you think about accounting, remember, keeping business and personal finances separate is key to staying organized and compliant. That's the essence of an accounting entity. Did you find this helpful? Hit that like button, subscribe to Acctvocab, and share this video to help others learn accounting easily.